Good morning, friend. How are you? Good morning, friend. How are you? Good morning. Got my cup of coffee. I'm gonna drink my broccoli for breakfast. Anybody like liquid broccoli? I think there's Brussels sprouts in there too. All right, 1 minute, we'll go. 1 minute, FX Street, 1 minute. All right, how are you? Oh, I always have to find the music now. Where is it coming from? Why does this always happen to me? I found it. All right, FX Street. FX Street, NFP. 218. Comment vous, how are you? My name is Wayne McDonell. I'll be your guide on this thing we call Forex. But don't you worry, I can also do futures. Do you want to do gold, oil, Bitcoin? Silver? Huh? Poor man's gold? Yeah, I can do that. You let me know. You are the boss. I am a humble servant. Thank you for participating in this year 17 that I've been doing trade non-farm payrolls live with FX Street. Holy smokes! which is amazing because I'm only 24. Yeah, pretty amazing. So thank you for being here. Thank you for being you. Thank you for having fun with me. But ultimately, this is a serious thing. Quite serious. So you are in my home office. So treat each other with loyalty and respect. Ask questions, get involved. Participation is the best way to learn. So let me know how I can help. Let's see, I think I deleted the bigger version of the pop-out chat. Hang on. Let me get that back. Okay, there we go. So anyways, cool. How do you set up your day? What is the first thing you check? Okay. Is it the index? Can we do that after the news, Peter? Yeah, if you stay to the end, I can answer all your questions. So here's what I propose our agenda to be. We'll go through the basic housework, then we'll go through the fundamentals. We'll take a look where we stand in the employment situation, and we'll try to tangent that over to monetary policy. So we can talk about all of that. Then we can go to our charts and we could look at what's likely to move and how it's likely to move, and then we'll focus on those particular charts. Then the news will come out. We'll get the volume and volatility, yippity-doo-dah, yippity-yay. Okay, so there'll be a skippity-scalpy opportunity, and we can take a look at that. Then, if you stay to the end, Peter, right, then I can... oh, excuse me. Wow, that was my first sneeze in a long time, and it just came out of nowhere. Amazing. Then we can talk about procedural aspects of being a trader. We could talk about professional aspects of being a trader. If you want to do that, how to set up a hedge fund, daily routines, how to get out of a bad performance. What kind of performance do you actually want to develop? If you want to talk about prop firms or raising capital from investors, we could talk about all those things. Everybody in favor of the agenda, say aye. And by the way, for those that are interested in that kind of stuff, I do run something called the Council of Investment Advisors. And in November, I gave them $50,000 of my money to invest. And we've built a portfolio, and it's now at $65,000. And will probably be significantly higher by the end of this year. And I'm teaching them portfolio construction and management using real money. Are there any other services out there? Are there any other professionals out there that have done such a thing, that are teaching portfolio construction and management with real money? See, I manage 3 endowments for charity. It's all pro bono work. And it's the same process and techniques to, understanding how to manage money for it to last in perpetuity. So if you're interested in joining that, we have a big meeting on Wednesday. Yeah. Whoa. Okay. And so we're looking for a few more council persons. All right. So quick housekeeping, then we'll get going. First of all, we are running a summer camp. It starts next week. And it's extremely hands-on. It's teaching you how to pull the trigger. It's teaching you how to actually do the thing. We found that everybody understands the strategy, but they just don't do it. And then you ask them why, and you're like, well, I was afraid. Well, we're going to fix that part of the of being a trader. So for a solid month working at the London and New York trading opens, you're going to learn how to trade volatility. You're going to learn how to trade market opens. You're going to learn how to pull the trigger, 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 pull the trigger. You're going to go out golfing with a golf coach and hit 10,000 balls until you perfect it. So that's starting very, 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 very soon. All right. So that's coming up hot and fast. All right. Trader's Way. We all need a broker. Trader's Way is an ECN. I think you need an ECN. Okay. This is my strong opinion that you need an ECN. It's a different model than most Forex brokers out there. This model, it uses straight through processing, which means they have completely different servers and technology and everything. So when you place a trade, it goes straight into a pool of liquidity providers. Most Forex brokers just put your trades against other people in their system, and it's like a dark pool. And they expect everybody in the pool to eventually lose money over time. It's like a casino. So they trade against you. It's called B-booking. So if you don't like that, if you want your service provider to have a symbiotic relationship with you, you need an ECN, and I recommend Trader's Way. If you want to learn how to trade, $88 a year gets you 88 hours of my video training. 88 hours. And these are lectures, not just babble. These are lectures. Stuff I learned from Harvard, for example. Some of them are good. Some of them are unbelievably amazing. $88 for all of them. So you want to do that. Okay, Quant box we're going to use today. Okay, but what it does is well, I'll show you. It explains it quite well. It does global macroeconomic analysis. You can drill down into particular assets to look at things like technical trend, economic scoring, 20 years of seasonality analysis, retail positioning, institutional positioning, so on and so forth. Amazing. Institutional positioning, both the capital stock and the capital flow of institutional investors. With this, we actually log directly into the central banks, and this is the central bank's projections. So when somebody says, well, we think the Bank of Canada is going to do this or that, no, we actually talk directly to the Bank of Canada. We don't have an opinion, except for the opinion of the Bank of Canada. We uncover the underlying intrinsic trend by looking at 6 different constituencies in the marketplace on 3 different time frames, and then correlate the whole thing, and then tell you, is there an underlying intrinsic trend of risk on, risk off, or neutrality? Knowing this will save you money. It'll also help you know when to let your winners run. If you don't know this, you don't know how to trade because you don't understand how the market's positioned or repositioning itself. And you're just trading blind. You're like, I'll do what I did yesterday. Amateur. You need to know this. And then ultimately, when you're all done, this is how you'll think about the market. Things you want to buy, things you're neutral on, things you want to sell. And when you think this way, you think like a professional. Hi, do you know where you can see the figures of NFP? Yeah, I'll give them to you if you want, Blaze. The Bureau of Labor Statistics. If you want to do that, Blaze, we can download it and go through it. I read these reports. Peter says, are they recorded? Yes, they are. Is it a one-time thing? It's going to be, think of it as truly a scalping boot camp of daily work multiple times a day over the course of a month or so. Okay. Yeah. So anyways, yeah. Okay. So this is my, from a researcher point of view, all I wanted to do was automate my economic research that I was doing at Harvard. This automates my macroeconomic research. Cool. Now check this out. If I go to TradeRs, I now have the ability to automate all my technical analysis. See, you work hours and hours and hours a day staring at your charts. I watch 7,500 charts at once. You probably struggle looking at 10. I look at 7,500. I see everything on all time frames, and I'm looking for the most quantitatively reliable patterns, and it tells me when it sees them. There's actually a couple more than 12, but the 12 we have in there. So imagine I'm looking for the 12 most reliable technical trading patterns on 7,500 charts, and I do it in real time while you work. I'm outside water skiing. Well, that's not quite true. But anyway, so you get stuff like this. Okay. For Forex, crypto, look, an ABCD emerging pattern came out 18 minutes ago on Ethereum. Like, holy crap, dude. Like, seriously, you should see this and your jaw should just drop. Oh my God. Entry level, stop level, target level, how long it'll likely take. Oh my God. Oh, whoa, dude. Okay, this one came out 33 minutes ago. You see? You like to trade the stock indice? All right, so anyway, it's pretty cool. We also have a thing called scalper, which is, extremely high probability, multiple patterns for with congruency on multiple time frames at the same time. And then you can say, give me a Forex trade with 75% probability of success, and there they are. Wait, what? Yeah. Huh? What? Shut the back door. I know, right? Well, so we're going to use the sonars today. So let's take a look at this. This is much different. All right, so we have non-farm payrolls in 40 minutes and 28 seconds. So what Tradars does with its sonar feature, boop, 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 it looks into the past. Okay, you get it? Radars look in the future, things that are coming, trade plans that are developing. Sonars look at the past. Past performance does not predict future results. Trading is not appropriate for everyone, and it is risky. So, past performance does not predict future results, but I like to know what happened in the past. So, this is what we do. By the way, this should knock your socks off. This is significantly more information than 95% of market participants. By the way, did anyone here trade PCE with me last week at FXstreet? We used this data, and it said the market was likely to rally for 2 hours and then completely collapse and reverse and drop the other way. And it did. What? We had green candles for 2 hours and then red. It gave it all back and then red, and went even lower. Uh-huh. And as it was green, I'm like, don't be shocked. We know what happened in the past. Okay. And holy smokes. Amazing levels of data. Okay, once again, it doesn't predict the future, but if you don't know the past, you don't know where you are now. And holy smokes, was that informative. So anyways, let's go back to this. We have 38 minutes here. All right, so what it says is if NFP comes out, okay, less than 185, this is what it's seen. And it's seen in the past looking at years of non-farm payrolls in situations where it's less than expected. Okay, there's a scalp, a spot and a swing. Scalp, spot, swing. Scalp, spot, swing. Scalp, spot, swing. Scalp, swing. Scalp, spot, swing. Scalp, spot, swing. Okay, well, you're like, okay, that must make... No, if you don't have money all out, you can't have it. Is it a lot of money? No. But no, it's not free. All right. I mean, do you think it's free for me? No. Okay, so we share. Cool. So anyways, going back to this, when we did PCE last week, the interesting thing is there was no scalp. And what it said is it'll probably pop, but there's no reliable pattern in which direction. However, it did say on the longer term, like a 4-hour chart, what it saw was up for a couple of hours and then low closes. So again, it said no scalp, but it did say reversal. A pop and then drop. And that's exactly what it did. Now, this is radically different. Like, you can't take for granted that it just always shows you 2 hours, 4 hours, 12 hours, and what direction and what probability. But you can't take that for granted because, like I said, in the PCE news, there were no 2 hours at all. And what it showed you was there was no reliable pattern. So to get off from the calendar to a sonar, two things must happen. Okay? One, the news event must create high volatility. If there's no vol, it doesn't get here. Number two, having looked at all the different time frames, short-term to long-term, post-news event with volatility, is there a reliable pattern in the volatility? If yes, include it. If not, remove it. So it just happens to be like these are reliable patterns broken down by dollar pairs. Okay? And only in situations where NFP comes out less than expected. So for example, if you're going to look at short-term charts on euro dollar, this is what it looks like. Oh my God, there's your trade plan right there. It's so beautiful. Don't look at it. Don't look at it. You're going to fall in love. Don't look at it. Okay. And then you're like, wait, so if it comes out less than expected, 75% chance it'll be up. If it's greater than expected, 75% chance just on the 2-hour chart, looking at 15-minute candles, it'll be down the opposite way. And you're like, really? Show me the money. All right. So back in April, it was greater than expected and it dropped. In March, greater than expected, it popped, dropped. Okay, February, right? Dropped like a ton of bricks. October 23, drop. Okay, if you go back to September, it went up for an hour and then low close. You see, this one dropped up and then low close. But notice the low close, 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 the low close. And if you flip it, if it comes out less than expected, which is good news, 75% based on this result in the past, it went up. Okay, so how do we know? Okay, pop and stop. Pop and stop. So up for an hour, up for an hour. July 7th, up for 2 hours. Okay, so on and so forth. We actually see this. Now, keep in mind that we're storing this information. We see, so you go back a couple of years, and on July 7th, okay, we have a couple of hours before non-farm payrolls and a couple of hours after non-farm payrolls. We have it in our database. You see how I brought it up just like this? This is what happened then. And then we're also recording that it happened. Okay? Okay. Simon, cancel the TradeR subscription so you can join summer school and get that? What upgrade? No. You don't. There's no special deal. Yeah, there's no special deal. What happens, Simon, is you sign up for summer school, and some people don't have TradeRs yet. They're joining summer school. I'm like, hey, we're going to use TradeRs as tools. You don't have to have them to understand what we're teaching, but why don't you try them out? Since we're going to be using them, why don't you try them out? So I give you like a 2-week trial for $15 or $14 or something, right? But there's no like extra special. It's not cheaper or anything. So no, that you don't need to do that. The thing is, here's the bottom line. I've made it so cheap I can't make it cheaper. I'm not making money. I'm losing thousands and thousands of dollars right now. It's not. There's no special cheaper coupon code. Yeah. Right? So anyways, so imagine all this data, guys. Imagine all of this. We have this data for these currency pairs on multiple time frames, all pairs, and it's not just that we know that this is going to have volatility. It's that out into the future, we're only looking, these are the only events you need to care about. You understand that part? But when you look at a calendar, okay, this is what a calendar looks like. Hundreds and hundreds and hundreds and hundreds and hundreds of events. Yes, Lawrence, everything will be recorded and saved for you. Yes. Simon says a summer school is $150. Yeah. At $59 with it. Yeah, no, that's the standard price. That's the standard online price for TradeRs. Now, if you're saying, well, you're paying $79, well, you have the upgraded version. Yeah, but there's no discount. I'm not bribing somebody to have better tools and trade better, right? So, no, you got it, man. I'm not going to, look, Simon, I'm not going to screw over people that are already subscribed and give new people a better deal and screw over the people that supported me to get this project launched. No, man, I got you. Okay. Anyways, going back to this, look at the importance of this data because you might not fully comprehend how crazy this is. There's hundreds and hundreds and hundreds and hundreds and hundreds of events. Okay? Look at all this. These are all news events. When you go to Sonars, you have to understand it looked at every one of these and asked, does it create volatility? No, it's not. No. Okay. Yeah, this is, you have to have the plus. Okay. So check this out. It had to look at hundreds of events and say, is there volatility? Yes or no? If yes, move on to the next question. If no, don't put it on a sonar. Step number 2, if yes, are there reliable patterns on any of the dollar pairs? So now you got to look at all these dollar pairs. And then you got to look at all these time frames, 2 hour, 4 hour, 12 hour, 48 hour. And are there reliable patterns? And if no, exclude it. If yes, add it. And then, remove the time frames that are not reliable. It's crazy amount of information. Do you understand to do this? It's millions of candles going back years because we're looking at years of this data. So now we can say, look, if you like trade euro dollar and you're going to do a 4-hour day trade, which means you can be in it for 4 hours. Okay, you're going to close it before the weekend. It's different information. Okay? And so now you see there's more candlestick data. These are the same 15 minutes, but now we go 4 hours before and 4 hours after. You have to understand we have this data in the database. This is not just little screenshots. This is candlestick data sitting in a table, and you're asking it, hey, what happened on November 3rd? Oh, well, I'll show you 4 hours before and 4 hours after. What happened August 3rd? But we also know we have all of this data. What happened on this day? Right? Isn't it crazy what happened here? Like, whoa, dude, it's crazy that we have this information. And then we say, well, based on what we've seen, past performance does not predict future results, but we know if the actual is less, it's very likely to go up on a scalp and stay up for at least 4 hours, maybe longer. There's right? Like, look at this. Let's break this down. Up for 2 hours, up for 4 hours, up for 12 hours, down next week. What? So let's only look at the 48 hours. Okay? Down by Monday. Down by Monday. Down by Monday. Okay? And this USD CAD is inconclusive. Don't trade it. Because, very often we have kitty CAD jobs, and sometimes we do and sometimes we don't. So looking at this, I would not even consider USD kitty CAD today. Thank you. Thank you, traders, for this information. And this, because the dollar's on the other side, we'd be selling this on the scalp and on the spot and on the swing. But look, Monday, it reverses. Once again, down, 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 up. So here's the other thing. We know we could probably get long and stay long in this scenario, but by Monday, there's a significant pullback. We know this empirically. It's not a guess. You're like, what? Wait, seriously? Show me that. Okay. 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 Oh, shut the back door. That's amazing. Oops. Isn't that amazing? But here's the thing. Here's the real time saver. Of the hundreds of stuff on the calendar, this is the stuff that is worth your time and focus. And everything else is a distraction and a waste of your time. Now, that's a pretty good start. Okay. Lesso, why would you ask somebody else the question when you can just go to the website? Just go to the website, click the button, done. Come on, Lesso, be independent. There you go, bro. So anyways, killer. So anyway, part of summer school, I mean, the real the focus of summer school is not selling you traders. We will use those tools, and we'll use other tools. We're going to use QuantBox, and I want to switch over to QuantBox now. But part of it will be you're going to master all the tools in traders, like how to trade all the patterns properly, how to use them to speed up your analysis and increase your focus on trading the right thing at the right time for the right reason. But also part of it is going to be QuantBox stuff, just knowing the rationale behind the trade, not just the fact that the pattern showed up. Who cares? But if you already wanted to buy it and suddenly traders goes ape crazy on 3 time frames showing you bullish trade patterns, dude, you might have something real on your hands. And then you need to be able to know how to actually drill down and pull the trigger. And so there's going to be strategy, but it's heavily focused on tactics. This is sniper school, where you lay on your belly and pull the trigger 10,000 times until you can hit targets. And you're not afraid of your weapon anymore. I remember I was trying to be a good dad, and I said, hey, son, we have a boys' weekend. The girls are going to the beach. I'm like, what do you want to do? And he's like, I don't know. And I like, hey, do you want to play Call of Duty? And he's like, I'm kind of sick of that. I'm like, oh, it is fun, but I'm sick of it too. So, hey, do you want to go to the Beretta Proving Grounds and do some shotguns? And I was like, wait, what? Like, why, is that a good idea? You want to go to the Beretta shooting grounds and pull, And he's like, yeah, that sounds good. And I'm like, yeah, that sounds good to me too. The place looks great. So I book it and everything, and like, holy shit. I'm actually going to have to like fire a shotgun in front of my son for the first time and not look like a pansy. I'm going to drop it, right? So anyways, scary, isn't it? Right? Scary, isn't it? Okay. Yeah. But you know what? Once you pull the trigger 2 or 3 times, it's not scary at all anymore. Now you're frustrated that you're not hitting the clay. So, yeah. So we got to get you out there. Yes, you need to know why to trade and how to set it up and know what to trade and when to trade. Yeah, yes. You'll learn that. But there's also a lot of like, let's go out and shoot some clays. There's not, doing a PowerPoint presentation on how to shoot a shotgun is different than holding it in your hands and pulling the trigger for the first time, right? So anyways, let's move on. .com. Yields are down. Sweet. Oil is up. Bravo, bravissimo. Now gold is back down to 350, right? 2350, and we've been there before, and it tried to rally up, but there's evidence now that China's not buying gold, okay, which is their version. By the way, people don't understand this. Why would China buy gold? I'll give you the short version. If you want to talk about later, we can talk about it. But when China's buying gold, they're devaluing their currency. And that's supportive to a slowing economy. Done. So they're done. They think that might be over. Done. So we can talk about that later, the mechanism of monetary policy and central bank balance sheet management techniques. I could do this all day long. If you want to talk about that, you let Uncle Wayne know, and I'll take care of y'all, all y'all. Okay? Farting around on S&P, waiting for non-farm payrolls, 109. Hey, we should be at 110, but we're not. And Bitcoin, Oscar Mike on the move. Hey, man, this was 65 or something. Now we're at 71. Where were you, bro? Right now, nothing's happening. Okay? The market's quite neutral as we're going into non-farm payrolls, but check out the scatter plot. This is just a quick glance, but metals are down. Okay, that's disinflationary. This is telling you inflation is cooling. You see? Right, Lesso? You look at that and you're like, oh, inflation's down. Wait, what's happening? Yields are down. Wait, what's happening? Market participants think the Fed's going to cut interest rates, maybe as soon as July, but definitely September. Oh, my God. Okay, what do I do? Okay. So I might, with that information, even though this is very bullish, I think that's going to cool off. Okay, but this is interesting. So I want to look at these things. I might want to look at these things. Swissy's fairly strong. Even Traders likes that. When I look at here, I look at the money market. That's risk on. And then when I look at the options traders, so these are all the options traders, they're actually neutral right now. Okay, so So those trading short-term treasuries are bullish, but the options market is neutral. Oh, so mixed bag, mixed. Okay, well, let's look at the underlying intrinsic trend. 1, no big deal. Weekly is 1, no big deal. Monthly is 2, no big deal. I would be cautious today until we get this information. So how do you get to this? So to understand what we're doing here is you cannot see the trend. Now you're like, well, I'm looking at my charts making higher highs and higher lows. That's not the trend. Fundamental trend. What is the entire world intent on doing? Not to do this, you cannot directly observe it. You cannot observe a black hole. You can't just get a telescope and point it at a black hole and look at it. It doesn't shed light. You have to have something pass in front of you and the black hole and watch the light around that object bend and say, well, what the heck is bending all the light? Oh, wait, there must be a black hole. The same thing is you cannot see this. And this is where amateurs go wrong because, well, they think they know everything. They're like, well, you don't know nothing because you can't even see this invisible force, the invisible hand on the market. So why did it work 2 days ago, but now it's not working today? What happened? Everything seems the same. Well, it's because you're not using the right tool. So to see this indirect invisible hand on changing market conditions, I look at gold traders. I'm not looking at gold, the asset. I'm looking at the gold trading market, daily, weekly, monthly. 1 day, 7 days, 30 days, all rolling. It's not month versus month. It's over the last month, okay? I look at treasury traders, the 10-year trading pit, okay? This is very big, deep, liquid market. So what are the treasury traders or bond traders doing? What are dollar traders doing? What are stock traders doing? What are yen traders doing? The old de facto reserve currency of Asia. So what are they doing? You might look at VIX as volatility, but I want you to think of it as options traders and or hedgers of S&P 500. Because VIX is just the trading of options that directly hedge cash exposure to the S&P 500. The VIX is an insurance policy. And if it's raining, you're buying flood insurance. But if you're in a drought, you're not buying flood insurance, okay? And so it tells you, based on money being placed, what they are doing. Then we correlate all of these, and then we break them down over 3 time frames. And I can tell you, okay, let's look rolling 30 days. Gold is up slightly, but I think that's a hedge on inflation, and if so, that's bad. But if you think inflation's falling, and we're getting that message more recently, well, then it's good. But let's go back 30 days, longer term. It's up slightly, that's negative. Okay? Yields, okay, are down. The cost of money, the cost of doing business in the United States is cheaper. That's good. Dollar is weak. That's good. Why is that good? Because we're taking our money and making foreigners work for us for cheap. That makes us rich. A weak dollar, when you're a reserve currency, means you are rich and you're having foreigners work for you for cheap. So it increases your standard of living. It's good if you're an American. And you know, it's good, like if you live in Honduras and you're making T-shirts for Americans, Americans don't want to do it. They're like, just pay somebody in Honduras to do it. But it's better than being hungry. Maybe it's debatable. You have the debate on your own. S&P 500 is up. That's good. I own it. I'm happy. Yen is slightly weak over the last month, not even 0.5%. That's neither here nor there. VIX has barely changed. That's neither here nor there. And then you take it all up and you have a slight score of 2. And under this situation, you're very, very modestly interested in owning Aussie, Euro, CAD, Kiwi, Gold, and S&P 500, and you're interested in leveraging up on dollar, yen, and Swiss franc. Your sellers over here. Now, it doesn't mean you do it blindly, but it's a way to frame what you do. Is everybody enjoying this? Like, this is kick ass, isn't it? Like, you thought traders was good. All of a sudden, you're like, whoa, this is cray-cray. It is cray-cray. So, like, here's a zoom in. What we do is we look at the yield on the 2-year now. This is hot money. And what traders are said as of May 30th. As of May 30th, okay, traders in the hot money pits told us they think interest rates are going to fall soon. Or you can reverse this. Not just interest rates, but inflation is falling. Therefore, interest rates would fall. Therefore, now the yield on the 2-year. And what we do is, to make a crossover, what we do is we take the 8-day average. It's a fib number. Don't knock it. Okay? You take the 8-day average, and then you take the real-time yield versus the 8-day yield. I mean, 8 days. I mean, it's not much, right? And so we have a crossover. So since then, you know what this says? Stock market up. Oh, you didn't know that? Well, guess what? The stock market went up during this period right here. Too bad for you. Too bad, so sad. Quant boxers know it. Okay, we cover this every morning live. If you're a subscriber to Quant Box, I review this with you every day live. So you have a master's degree from Harvard working on your team for $80 a month. you have a professional economist and the tools for $80 a month. It's so stupid. Anyways, cool. Now, let's drill in hardcore into non-farm payrolls. You guys ready? You guys ready to get let's get dirty. Let's get down and dirty into jobs. Non-farm payrolls. Boom shalakalaka. All right, going back a couple of years, our average is 263. We've dropped below 263. Okay, so that is what the Fed is looking for. Now, I'm not saying the Fed subscribes to QuantBox, but, it's nice for us to know, like, if we're definitely below 263 and 263, let's say the number comes out low this time, then this number is going to update, and so 263 might become 253. But that downward pressure in non-farm payrolls is going to give the Fed the ability to cut interest rates if they want to cut. Now, they've told us in the past they don't really care about this. What they care about is inflation. But now inflation in many measures seems to be cooling, and many other aspects of the economy are cooling. And so that gives the Fed now to focus back on jobs. They would like to get, they haven't said this, but they'd like to get the unemployment rate around 4, and just enough to signal kind of psychologically that they can, and by the way, it's not a dovish cut. It's a normalization. And there's a big difference in the psychology of the Fed. I'm not going to talk about this now because the news is coming out soon, but it's not a bad thing. You're going to get a different result than normal. So don't treat it like this rate cut is the same as 2007 when they were slashing interest rates. Okay, there's a whole different world going on now. In fact, in about a week and a half, they're informing me. They are teaching the internal processes that they now use for their monetary policy, and it's quite different. And we might be discussing, I would imagine, this current situation and how it's the perfect situation to deploy this new mechanism. So just one other thing. So that's in like 10 days or something. I'll be in St. Louis. I have meetings all day Monday, and then I have nothing to do Monday night, and then I have meetings all day Tuesday, and then I'm flying back home. If you want to meet in St. Louis and maybe get some ribs and smoke a cigar at a classy joint with craft cocktails, yeah, let me know. You want to meet? Maybe we can take a photo in front of the St. Louis Fed. If you want to check that out, if you're in the neighborhood of St. Louis, and again, you're like, I like craft cocktails, I like cigars, I like Forex, and you want to talk shop, let's get together. Let's hang out, bro. Okay? But anyway, so here we are, $1.75, but 238 was expected, and we got a low number. Now, the red is going to be the revision. Now, I think today the revision is going to be important. Okay? You see how the revisions have been, fairly high. And I think we might get a low revision. And, so even if, let's say, if the number comes out pretty close to expected, that's neither here nor there, and it's neither good nor bad, but the revision, okay? But then there's other things that I think are going to be important today, like wage growth. Let me show you wage growth. And we've been dropping below. The average over the last 5 years is 4.4, and we're below 4 and falling. And this is really what the Fed cares about. Once again, most people don't know this. They don't have this information. They're just like, it came out 183. What does that do? What do I do? Do I buy the euro? What do I do? Like, dude, come on. Time to be a professional. So anyways, we're watching wages here, and if wages drop to like 3.8, like that is green light for the Fed to cut. And that's all that matters. Okay? Okay, Jay, I can do Challenger report. Hang on. Let me finish my analysis here, okay? So a 3.8 would just be brilliant if you want the Fed to cut, and that would make the stock market rally. Great. What about the trend in unemployment claims? Okay, so the average right now is 200 going back over time. Going back over time, the average has been 200,000 people per week asking for government assistance because they lost their job. We're at 229. And the last revision, we had 218, but it was revised up to 221. What does this mean? Up, right? A bigger green than average and revisions up. That means the employment situation is cooling and the Fed could cut. It tells the Fed, if you want to do it, you got the trend in place. Like, at least for normalization, it's okay. Like, you wouldn't cut like, oh my God, the economy is falling off the cliff. No, it doesn't say that. But if you wanted to normalize, you could. And so now we have the average and we have the revisions. You're like, oh my God, that is so good. What about JOLTS? JOLTS came out recently. We were printing 12 million. And now we dropped very significantly in this period here from 8.5 million jobs to 8.1 million jobs. Massive drop, massive. Statistically, month over month, that is huge. What does that mean? Companies are not advertising for as many workers. They're not interested in hiring people. Yay! That's the economy cooling. And we're well below average, and we're in a downtrend, for show, and the month-over-month change, 8.5 to 8.1, is massive statistically. The rate of change is accelerating. Hey, if you're at the Fed and you're thinking about cutting, you can cut. Oh my God, this is so good, Wayne. Keep going, Wayne. Keep going. I will. Let's do the unemployment rate. Okay, here we are, 3.9. The average is 3.8, and this goes all the way back pre-COVID. Okay, now think of it, pre-COVID. If the Fed sees us go above 4.0, see, we're at 3.9, which is ever so slightly above pre-COVID level, if you average it out. Now, okay, and if we go over 4.0, like this one back here, it's an interesting psychological change. And the Fed could say, well, we hit the 4.0. Reason to cut. Oh, my God. Oh, my God. But really, to cool inflation, we need this number to drop. And going back this year, dropping it is. So we need that down. We need this up. We need this down. We need this up. And we need this down. Isn't this good? Dude, $80 a month. And I sit here and I teach you how to understand economics. I could have bought a Lamborghini to learn this information with the amount of money I spent. And now you learn it for $80 a month and have me teach you. It's cray. Okay, so that's Quant Box. Oh my God. It's good, isn't it? So you're like, how does that translate? And it translates like this. A bullish score, technical trend, macro fundamentals, dollar versus euro, GDP, inflation, interest rates, unemployment. What does that all mean? It goes into the score. 20 years of seasonal average, right? Oh my God, that goes into the score. Institutional positioning is 50-50 for the dollar, 60-40 for the euro. Okay, but retail's heavily short. Good to know. I know, right? But here's the thing. If you're like, yeah, but is it any good? And I got to move over here. Is it any good? Okay. If you go like, let's pick out silver here. Okay. This is the past performance of what QuantBox was giving it as a macro score versus what was actually happening. So you're like, Wayne, what about the S&P 500 or something like that, right? You can go back in time and caution. Okay? And then it turned bullish here and you caught this move. What? Yeah. Kiwi dollar, I'm just ran 272. My clock is off. I'm sorry, guys. My clock is off. My bad. 272. Tradar says that's terrible. Okay? 72% chance of down is right. Whoa, dude. Why is this here? I'm on the wrong thing. My clock is off for some reason. Oh, man. That sucks. Okay. What do we know? Talk to me, Goose. I'm going to get knocked out of break even on this trade. What do we know? 72% chance of down is what we know. We already talked about it. Let me bring that up while that's happening. Ooh la la. Okay, way greater than expected. Okay, way bigger than expected. Okay, 75% chance of down. Come on. I'm trying to get this to fit while I'm doing this. Okay. Oh my God. This is what we knew. This is the trade plan. This is the live trade plan. If actual is greater than 185, 2 hour, 75%, 2 hours down. Holy smokes. So I'm going to get knocked out of this trade at break even. Boo. Nasty, huh? Very disappointing. Now, we're going to have to break this down into digestible pieces here. Let me pull up the report. Okay, I get it emailed to me, but let's get it faster. Okay, let me bring this up. Hang on. Wait, that's not what I want. Okay, NFP 272 in May. And the unemployment rate changed a little to 4.0, though. That's good. Get ready. There's likely to be a whipsaw. Be careful. That is good. So this is bad, but this is good. Be careful now. Be careful. Be careful that you have terrible news with good news. Don't be shocked if people fight back here. Okay, employment continued to trend up for several industries. Healthcare, government. Yeah, thank you, government. We need more people in our government. Leisure and hospitality, scientific, technical. These are good jobs. Oh, right. Household survey. This is, they ask you, do you have a job? Yes or no. Now, it's not a good survey because if you answer, well, I have a PhD, but I can't find a job doing PhD stuff, so I work at the grocery store doing, at night, bagging groceries. And then in the evening and weekends, I am an Uber driver. And they're like, so you have a job? You're like, yeah, I have a PhD, but I'm an Uber driver and I bag groceries. So, yes. And that's it. They move on. It's not a great survey. They don't count if you have two jobs. They don't really count if you're underemployed. But nonetheless, it's a household survey. So the unemployment rate at 4.0, the number of unemployed, 6 million. Okay, fine. Jobless rate, okay. Among worker groups, okay. Let's get to the wages. Let's skip this. Establishment, higher than average. Yes, we know that. Right, higher than the average of 232, so that's a really hot number. They only track 12 months. I go back farther than that. Employment continued to trend up in several industries. Okay, great. Healthcare added 68,000. Great. Now, how much are they paying them? Leisure hospitality, all right. So Marriott hired, great. Professional scientific, great. Social service, great. I'm trying to get to wage. The average hourly earnings. Okay. Went up. They're still, right? So we're at 4.1. That's not good. Remember, we're supposed to be 3.8, 3.7. So we're back to 4.1. Bad news. So it's not a good non-farm payrolls if you want the Fed to cut. But wages are back above 4, and we're well above average on this. And now we want to look at the revision. Okay, these are all things I talked about before the news came out, right? We might have to find that on the calendar. FX Street probably has it on their calendar. If it's not here, I'll check there. Wow, this isn't loaded yet? Really? Okay, that's funny. That's terrible. All right. I need to use FX Street's calendar. They have the best calendar. Sound like Trump. They have the best calendar. Talk to really smart people, and they all agree. FX Street has the best calendar. It's very good. So average, we know that's up. NFP participation rate, whatever, use 6. I don't want to get into that. But I do want the revision, and do I have it on this calendar? Probably not, huh? So unemployment at 4. That's really good, huh? If you want that. Is it going to will it populate this is the question here. Oops. Yeah, so I don't have revisions. So how come I can't find it here? Yeah, I'll have to do it later. I do want the revision as well. Yeah, it's going to be tough on the stock market today. That is just, this is the end. Too bad, huh? Yeah, well, you know what I'm thinking, Bern, is that this number is going to be revised down, huh? Well, Joseph, think about it. What's the likely outcome for the reserve currency? Like, why would you look at pound Kiwi when you just had a massive economic event for the reserve currency? And you want to do a cross pair. It makes no sense, Joseph. Okay? Makes no sense. I wouldn't even know how you'd get to that conclusion, right? So why don't you pick a dollar pair? Right? Like, I've already gone through it. Okay, let's do this again. Let's break this down. Okay, so notice that Quant or TradeRs is updated. The actual is greater than 185, so it deleted everything else. You see that? It's updated itself. Okay, great. And under these circumstances, Aussie dollar down, down, down. Euro dollar down, but only short term. Pound dollar down, but medium term. Kiwi dollar short and long term. USD CAD up. Okay, USD Swiss franc up. And USD yen. So you want to know about yen. Well, according to past performance, 75% USD yen up, 87.5% chance up for the rest of the day, and 75% chance down for longer. So let's look at the day trade. And you're like, well, prove it to me. Okay? So it says we can draw the following conclusions about the expected movement of USD-Yen based on the last 12 non-farm payroll events in the United States. 87.5% chance that the 4-hour trend is up, since the actual is greater than consensus. And it shows it to you. Pop, drop, high close. Pop, drop, high close. Pop, sideways, high close. Pop, drop, high close. Pop, and then gave it back. Okay? And then up. And up. Wow. Whoa. Okay? Okay. So, look, so Lawrence says, so do you think it's risk off? So I just spent like a solid half an hour going through all the fundamentals and all the technicals. I've shown you the result of studying millions of candles for this NFP going back years. Showed you the consolidated aggregate results of every situation like this, and then went through multiple aspects of the labor market for non-farm payrolls, weekly jobless claims, the JOLTS job opening and turnover survey, the unemployment rate, and wage growth with all averages, correlated everything back to what the Fed policy is. You shouldn't be asking that question now. I answered all of that before it even came out. So I would recommend going back and watching the recording. Okay? You missed it, right? You're not on the clue train. So don't get upset, and I'm not being mean. It's just you're asking, no. You need to go back and watch the video. Yeah, watch the recording. Okay? Because when I say, here's the 6 pieces of information the Fed's looking to cut interest rates, and I explain all of them, and I have them graphed and averaged and everything, and then you get something the opposite. Well, what does that mean? Yeah, you have to think about it. All right. Yeah, all right. All right. So, wow. Wow. The world didn't like that. Now, here's the thing. There are still bulls out there. Okay? I'm not telling you what to do because you got your big girl panties on. But there will be constituents that are interested in buying sort of in this place. It's not what the fundamentals are telling us. Okay, I'll do that soon, Jay. I'm happy to do that, okay? Okay, but you got to be careful because fundamentally, that's not what happened today. But there will be someone to buy, and they'll buy low, okay? Remember, there'll always be someone to buy low. Okay? So fellas, no matter how ugly you are, there will always be a woman desperate enough to marry you. And no matter how dumb this trade is to buy low, there will always be someone to buy it low. Your customer says, how can you have a low PMI and a high NFP? Different surveys, different methodology, different audience, different sample size, different everything. Thank you, NP. Bernd, which currency pair do you want to look at? And I'll be happy to pull that up. Okay. Now, that is not going to be good for the stock market today. I don't want to look. So Dow, right off the bat, like Dow is a heavy sell. Oh my God, look at that. That's down for days. Going to tax that for days. Well, once again, it's just in trade hours. So, Bern, how about this? I know you've been debating whether you should sign up or not. Just sign up. It's the big deal. It's only money. Okay. Down, 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 down. Okay, so I would definitely, under this circumstance, flip this way. No, I know. But TradeR saves you time. I mean, that's it. That's it. Yeah, I know. I mean, dude, $79. How could that be a money issue, right? Yeah. This is the end. All right, so that is nasty. Okay, so this would be the next assumption, and that's not good. Okay, that is not good. Abdul says euro dollar, 75% chance of bearishness. It's already been done, Abdul. 75% down. Yeah, so, yeah. We can do some crypto. How many people here like crypto? Henry's like, yeah, time for summer holiday. Well, for you, it's winter, right? So. Well, Abdul, I mean, again, frame everything. Let me say it this way. Okay? Let me say it this way, Abdul. It will go down and up. So don't ask questions like that. Because no matter what happens, the market will go up and down. So, for example, this is a downtrend. So what's more interesting, Abdul, is what are you going to do? Are you a seller or a buyer? You could buy it here and you could buy it here and make money. No, I wouldn't do it. That's not what I do. That's not how the Wayne rolls. The Wayne sells here and the Wayne sells here. So don't ask, it will go up. The thing is, when it goes up, are you going to sell it? And you make that decision now. In fact, as I see red candles, I prepare and hope for green candles because I'm going to sell them. Okay? So it's the thought process. Like, let's look at NASDAQ. Okay? For those that want to dip to buy NASDAQ, the dip is occurring. And I already have it marked. If it got around here, I have permission to buy it. It's also the daily 5 EMA, and I love riding the 5. So I have an opportunity right now. It's falling. It's red candles. Yeah, dude. Well, we just kicked off the weekly target. See, it's like things like that. Like you're trading the NASDAQ, but you don't know that that's the projected top for the week. You're like, I don't know. I don't know what the top is. How do you trade? Look at this, guys. This predicted that. If you're missing that piece of information, you just don't know how to trade, and you can fix that. I'm going to charge you a boatload of money to teach you how to trade right. It cost $88. If you're not willing to pay the $88, you're on your own, bro. I made it so stupid cheap. I'm not joking. The $88 is better than any $1,000 course in the market. You will not get as much value if you pay some guru $1,000 so he can make a car payment. Mine's at $88 and is better. So I got my attitude in the right place, okay? But you got to sign up, and then you got to do it, and then you got to learn it, and you got to obsess over it. But anyways, this to that is obvious. I have the arrow. It's all drawn out. It's like it's so simple and boring. So now, look, are you a bull or not? Well, you might say, well, now it's all over. Well, technically, it's not all over. Maybe economically it could be. But right now, this is what a bull would do. Are there still bulls in the NASDAQ? Probably. Is the Fed cut delayed? Yeah, probably, for sure. Does it mean it's all over? Does it mean NASDAQ's going to fall down to here? I don't know. What's your decision on that? If you get it right, you'll be a professional and you'll be rich. Or are you simply going to buy the dip? Remember, not only is this going to move up, not only is this going to move up, it's going to move up and to the left because it's lagging. So you want to catch the future 21. So your area of opportunity, what I call the AO, is still like beautifully right here. And that might be today, it might be Monday, but this pullback might go up. Will it go up? I have no idea. What am I, a genie? I'm a genie in a bottle, baby. Okay? I'm not a genie. I'm a male model. Okay? All right. So here's the thing. That might happen. I can break that down into plan A and plan B. Sweet. That makes sense. That sounds logical. If we drop down to here, that from this top, that's a 100% retracement. Okay? That's not a retracement. That's a reversal. So then my future says, if that drops down to, I don't know, somewhere between S1 and M1, if we get that 100% retracement, then my plan is it's going to go up to here, and then I'm going to sell it. And it's a July sell, not a June. Oh my God, is that going to happen? I don't know, bro. I don't know the future, but I know what I intend to do. And, Has it happened yet? No. Okay? And if it happens, it's not a threat to democracy. No, it's overpriced. All right, so here we are, plan A, plan B. But do you think this way? Do you have the strength to let the NASDAQ fall for 4 days and then buy it? Or do you stare at it on a 15-minute chart, watch it fall, and just keep selling even though it's bouncing? No, you got to have a bigger picture, bro. So right now, the only thing that's in play is this. And that's what technical analysis is. So has anything fundamentally changed? Was the Fed going to cut in June? No. Was the Fed going to cut in July? Probably not. Now, people's attitudes were like, oh my God, things are improving, and they were. And like I said before, if certain things happened or if the current trend continued, the Fed could cut if they wanted to. Well, now that's off the table. So when is the cut likely? We're back to October and December. So there's a cut probably priced in December, and we can measure that if you want. And there's still some probability in September, I would imagine, but it's just like July, forget it. See, Jamie Dimon at JP Morgan said this morning, like, yeah, he thinks there's a cut on the table for July. Well, he's wrong. It's off. It's gone. Ish kaput ya. So we need to adjust the price, but is it reversal time? Is the economy over? Are we going into recession? We just added 300,000 jobs. It's not going into recession. The problem is it's too good. That's an interesting problem to have. Oh, yeah, that's a problem. Everybody's rich. So, it's a delay and defer, but maybe not a collapse, So anyways, the cut's gone probably. Okay. Does the ECB and Bank of Canada cut impact dollar? Well, 40% of Forex is euro dollar. So a change in the policy at the ECB, does it affect the euro dollar? If 40% of a $7 trillion a day market is euro dollar, 40% of 70. Okay, so what are we at? $3 trillion a day turnover just on euro dollar. Yeah, you would think so. But then what is more important? ECB or Fed? Fed by far. So if the Fed's not going to cut for another 5 months, holy schnicker-schnocker. Yeah, it'll just run over anything the ECB is going to do. But anyways, I'm looking at this. No diggity, no Dow would be my sell, and NASI would be my buy. One of them's going to work. This is definitely a sell pattern. Definitely. There's no doubt. And a delay or a deferral of the rate cut would likely bring this down because the cost of doing business in America is going to stay high. Well, that's not good. So, so if this is going to fall, this would be the one I would sell. But if people get over it and say, yeah, well, but 4.0, yeah, well, but the economy is good and companies are profitable. Yeah, well, but they'll cut eventually. Like, different people are going to treat this differently. Well, then if I'm going to buy something back, I'm going to buy NASI back. So I'd sell the Dow, I'd buy the NASI, and right now I'd be waiting for the setup. Let's do gold, oil, and Bitcoin. Okay, there's your biddy. That's your risk off. Okay, this is me, planned it all out. Ultimately, it looks like a big fat nothing occurred. Okay, we're kicking off the 4-hour 21. It's still bullish, son. Oh, but this and oh, but that. And what did they say on Fox? What did they say on CNN? What did they say? Why do you listen to other people? What, right? Don't listen to people on TV. Don't listen to YouTube gurus, including me. You need to be independent. Don't get distracted by other people, right? I used to watch the people on TV, and they're like, oh man, they manage billions of dollars, and they go to work in a Rolls Royce, and I'm just a retail Forex trader, and they're like Greek gods. Turns out they're not that bright. Their secret to success is they manage a lot of money. That's it. And they're extremely mediocre. They're moderately competent. And I learned pretty early on to not listen to anybody. And that the way out is to do all the work myself. And I've been doing that for a long time. Okay? NP's like, I'm a wealth manager, I can confirm. So I actually download the reports like I did the employment situation report, right? I actually download these. And you're like, which ones? All of them. For just the US dollar? No. I download Australian, New Zealand, Canadian, British, European, US, Japanese, Chinese. I'm telling you, I download the reports and I read them. I learned that early on. I used to read like in my early years, and remember, I'm a strange person. I obsess. And in my early days, I had something like 18 magazine subscriptions, magazines and newspapers. And I was so naive, I didn't even know there was a Bloomberg Television and CNBC. I'm telling you, that's how naive I was. I was a venture capitalist. I thought the stock market was stupid. I thought it was for losers paying $50 a share when I buy them for 5 cents a share. The stock market was to dump companies and get rich. And then what they do with after it, look at me, I'm trading a meme stock. It's up 30%. Oh my God, it's down 10. I just thought that was stupid. So anyway, so I was never interested. So when I finally became like a Forex trader full time, well, I didn't know there was like financial TV. So I ordered the Wall Street Journal. I knew about that. And I got the Financial Times. And then I got Investor Business Daily. I don't even know if these things exist anymore. Wall Street Journal for sure. Which is cool because I've been quoted by the Wall Street Journal now, which is nice. Kind of full circle, right? And then I had Nikkei Weekly flown in from Japan. Yeah. I paid like $500 a year for a magazine for the oil industry. Even when I was a venture capitalist, I had a subscription to an import-export magazine that did supply chain management globally because we did a lot of business in China and other foreign countries, because we're a product-based venture capitalist firm and we actually built stuff and distributed it. And so I was very interested in those magazines, but they were industry magazines. So you got like 6 of them, maybe, sometimes only 4, and they cost a lot of money, and you had to be in the industry and you had to prove it. So anyway, so I had all this data coming in. Pretty amazing. Now I have QuantBox. It just automates everything. But I started reading the newspapers, and it turns out, even though I'm talking about publications like the Wall Street Journal, because I started doing the work, I knew what the data was. And I watched the speeches, for example. I actually watched the Fed speeches. I watched them do it live. And I realized on fairly often, right? Fairly often, not only was the Wall Street Journal a little bit wrong, sometimes they couldn't be more wrong. Let me say that again. They said the opposite of what I watched live. And I realized hundreds of thousands of traders and investors just simply read the Wall Street Journal, and it was wrong. I was there. That's not what happened. And that was the day, I'm thinking of a particular moment of Ben Bernanke could not have been more clear. He said something like, if you think what I said means the Fed will cut, then you were wrong. And then they said, Ben Bernanke said they were going to cut. And I'm like, dude, no, he said they were not going to cut. It couldn't have been more wrong. So I just fired everybody. Anyone with a journalist major was fired that day. And from that moment on, I'm like, I rely on me and that's it. And it made me independent. And I want you to be independent. This is where I'm going. You don't need a guru. You don't need a newspaper subscription. You don't need to listen to the idiot billionaire trading his hedge fund on TV. Okay? He's either selling you something, right? Like the meme stock guy, don't you understand? He wants you to jack up the price 30% so he can dump it. What do you think happened today? Did you see it? GameStop was up 37% today because Hello Kitty or whatever his name is popped the stock and then he dumped it and now it's negative 10. Dude, why do you, oh my God, right? That should be illegal. But he's got a perfect world because he's like, well, all I did was show everybody my position. I didn't tell them to buy it. But anyways, I want you to be completely independent. And so you need to know the data. You have to have the data. You have to understand the data. You have to read the data. And that's why, we have these tools now, for example, to make it somewhat easier. So you can see something that's above average or below average, and then understand how that turns into a monetary policy. So like I freaked out, like I wanted this to be 3.8, remember? And it came out 4.1. 4.1? You should say, dude, seriously, did you catch that on the subcomponent, the hourly wage growth subcomponent to the establishment survey in the non-farm payrolls release? Dude, people don't. Okay? Oh, Jen? Yeah, no, it's tradears.co/summer school. Yeah, hang on. Easy. That should get you there. Okay? So I'm like, if you had this type of data, you're ahead of even professionals. Did you know that? Bloomberg terminal costs $2,000 a month. I charge $79. It's so stupid. Why would you trade without this knowledge? I just don't understand. I'm like flabbergasted. Oh my God. So anyway, so now you're looking at subcomponents of non-farm payrolls. And you're like, dude, did you see the 4.1? That was nasty. Now, we had covered this before, so when I'm actually reading the report with you and we look at the 4.1 on we're looking at this, you're like, 4.1? Oh my God, I wanted 3.8. 4.1 is horrible. You know what the average retail trader sees? They didn't even look at the report, and if they did, they wouldn't catch that. What's up, RC Cola? Huh? All the sugar and twice the caffeine. Yeah. So anyways, like, oh my God, you see the level? If you had this tool in your arsenal, you're going to take your little amateur Forex trading and turn it into a sustainable business. Do you understand like how powerful this truly is? Insanity, huh? Yeah. Yeah. So on Wednesday, we're going to get an update. Okay. We're going to get an update by the Fed. And this page is going to change. Well, thank you, NP. Okay, this is going to update. The Fed is going to update their projections. This is what they've told us, and then they're going to update. So get ready for all these numbers to change. And then the projection, okay, this is going to move. So this is going to move up, and these are going to move. This will probably move up, and this will probably move up to there. So the future's probably going to look like this. I'm going to guess. But remember, we get this from the Fed, so I don't need to guess. Okay, so this is going to probably turn into, oh, that's a terrible green. Delete. Let's see, can I get a closer green? Okay, this is going to go to like this. And then it's going to turn into here, probably. Okay. Now, I think they'll actually step it. And I said this in January, by the way, right? I said this in January that when they do this, it'll actually be like, let me do a different scenario here. I'm just going with trend because they're not going to tell you this, but I'm going to tell you this. And I told you in January. So here we are now in June. And, you know, I think we're going to get like this. Let's make a cut in here. Let's make it a cut. Let's do it again. Okay, a cut, first cut, no cut, second cut, no cut. Something like that. And then they have no cut here, which is interesting. So we get to the same spot. So what will happen is this will have a cut, okay. A bit of a pattern like that, right? Okay. So anyways, this is what the Fed has told us. There's a cut. Whoa. That was kind of, okay. That the cuts are going to start in the third quarter. They've told us that. Now what they're going to tell us is, no. This is the assumption. This is why the market dropped. Okay, the assumption is that cut's gone. So now the first cut is this one, Q4. And so this currently is the second cut, because remember they told us 3 cuts. So that's gone. So now the first cut would be here. And therefore, this would be green until then. And that's why I draw it that way, where this cut's gone. Oops. Okay. And it looks like that. Boom, boom, boom. Cool. You see? DG's got a podcast. Cool. How many subs do you have? Oh. Yeah. Well, everybody's got a podcast now. All right. So anyways, wowzer, huh? Okay. Okay. We already squeezed enough out of gold, right? Oh, I'm your podcast, yeah. Well, I'm very unpopular. Here we go. So we've already squeezed all the juice out of the lemon. Okay. Okay. Interesting, right? So this is the 5-year, the 20-year averages in blue. The 5-year average is in pink, and what has already occurred this month is in gray. Already, we've had an above average month. Okay, what else do you want to look at? Well, you look at things like retail traders want to buy it, and institutional, whoa, nice mouse, huh? Institutional investors are long. Now, what we want to see is, are they moving this way? Are they selling? See, their stock. Think of it. You don't just dump your position all at once. You slowly sell off your position. So they're heavily long. The question is, over time, will we have less bulls and more bears? How would we know that? How do we know the capital flow of institutional investors for gold? Does anybody know? DG says, you doubt it, that I make the most sense. Yeah, but nobody wants to know this stuff. Okay, they want to see a kid making $2,000 trading Forex today. That's what people want to see. Okay? Okay, good. He's your hero. He couldn't afford to raise my children, but he would rather spend money on a car. Sweet. Follow him. He's a child. Those YouTube gurus, huh? Look how fun and easy it is to make money. My teenage son probably has a higher net worth than him, with money he earned from working hard. My son's a teenager and has a retirement account with thousands and thousands of dollars that he saved. Dude, my son's going to retire without my help, a multi-millionaire on his own. But that's not what's sexy on YouTube. Right? So anyways, okay, whatever. But I will teach you the truth, though. That's all. Veritas, right? I have it on my gold ring. Look, it says right there. Veritas, the truth through knowledge. Okay? I don't have it somewhere, but Harvard deemed me Illuminati, and they gave me a responsibility. The power is through the information. So anyway, yeah. So yes, the answer to the question, how do you know the capital flow? The stock right now is very, very heavily long. So remember the other page, it said 85? There it is, 85.11% of institutional investors are long. Heavily long gold, they're still heavily short yen. And here's everything in between, but that's moving. All of this is moving. So they could start taking profit and slowly goes from bullish to neutral, right? But this is long term. This is how much gold is in the vault. Okay? All right. What you want to see is the change. And that's the flow. So you want to see capital flow. So I organize this. Okay? And there was a 4.2% increase in bullishness in gold. Aha! But not enough information. We can get really deep in here. And this is how you know how the market works. For example, we lost bulls and bears. We just happen to lose more bears than bulls, so it looks like a positive change. But we lost, the market did not go up. There's less bears, so it's a positive change. But we lost on across the board market participants. So when you saw the green candles earlier, that was not people buying. So if you were chasing green candles, you don't know what's going on. Isn't that amazing to have this level of detail? Not only did I cover this on Sunday or Monday morning with my group, Friday afternoon, QuantBox sent me this information via text. Do I even still have it somewhere? Let's see, I have to go all the way back. Because QuantBox also tells me when key things change. Oh, you know what? I didn't get it as a text. I got it as an email. I'd have to show you that. I wonder if I even have that. I don't know what email it even goes to. Where does it even go? Hang on, you might actually like to see this. No, this email. Oh, where does it go? It might go to my QuantBox email. Oh. All right, let's see. So it was Friday. Yeah, it goes to this one. Okay, COT, is that in the title? I don't even know. Oh, no, it pulls up a cot. No, come on, Google. Market open, market open, market open, weekly fundamental analysis report. COT, May 31st. Okay, so on May 31st, I received this email from QuantBox. And it looked at this report for me. So let's go back through history. I used to download this report from the CFTC. Let me show you how to do that. CFTC.gov. And I used to do this every week. The Commitment of Traders report, and you want to do financial long format futures only. This is it. Here's all the information. This is where we get the information, by the way. And so I used to get this. And you can download it as Excel. And you could look at, okay, here's, some of you guys might like this, South African Rand on the Chicago Exchange. Dow Jones Industrial Average. Okay, Mexican peso. Australian dollar, you see? And you get dealers, asset managers, hedge funds, okay? And then you can get the positions, long, positions short, the difference, so on and so forth, okay? And then you get the changes, long, short, okay, you see? And you have to go through all of this. And it took me hours. And then I paid $300 a month, and then they gave it to me in an Excel spreadsheet with graphs, and I did it visually. So it took me from like a half a day to maybe a couple of hours, and then and so on. And that cost me about $300 a month. And now I have all of this here. And I can just organize it and then look at it and just, here it is, and understand. So you can get situations, guys, where you're watching gold go up. You see nothing but green candles. And I can tell you that nobody's buying it. It's bears leaving. They're selling you their positions, but there's no buyers. So all of a sudden, your technical analysis tells you to buy it, and it goes up for a while because more people are selling, and then they stop, and they go away, and there's no sellers, but no one's buying, and you bought, and it just goes nowhere, and it collapses, and you're like, well, what the hell just happened? Oh, you don't know what's going on. And that's what happened. Okay. And so anyway, so now I go from the COT data. Okay. I'm going through the history. I used to spend a half a day, maybe all weekend going through the COT report. Then I spent $300 a month and I just spent hours and hours. And then now we have Quant Box, and I can, every Friday when this information comes out, I can sit here and I can look at it and I can organize it, all that kind of stuff. And I still spend time. But now, here's the next iteration. My mouse is really freaking out here. Now the next iteration is on Friday afternoon. So I'm going to get one in the next couple hours. May 31st, 7 days ago. Here's what changed. Uh-oh. My mouse is dead again. This happened to me a couple of weeks ago. No mouse. No mouse. Now it's just gone. It's on. All right. So anyways, now here's the report. Okay, look, people are shorting NASDAQ. They're heavily shorting the Dow. And we know this week, technically, it looks like the Dow is set to tank. Okay, do you understand? Dude, imagine this is a competition. Okay? Imagine this is a competition. I have 20 years of trading experience, a master's degree from Harvard that covers all this information. I have a great broker that's an ECN straight-through processor that I have a symbiotic relationship with. I have deep fundamental analysis and hardcore technical analysis. I'm watching 7,500 charts right now, and you're watching 5. I have better data. I have more data. It's clear. It's organized. It's all pulled together. I have the complete package. And then an amateur comes up and they don't know what they're doing. I'm going to roll them over. Steamroll them. Just run them over like a freight train. And they transfer their wealth to me because I have better skills and I have better information. I have better detail. I have better focus. And what will happen is their net worth will go to my children's college savings fund so that they'll go to university and that amateur trader is going to pay for it. Just like renters make a landlord rich, right? I'm like, dude, it's not my fault. Okay, it's not my fault. I have great data. And so, like, this is why, like, I make this stuff cheap now. Now, listen up. That was kind of the emotional part. I make my stuff cheap, but it's not because it's cheap. This stuff takes millions of dollars to develop. Do you understand that? Cool. So let's get to the next step. Let's talk about you. You need to know how to trade. You need a good coaching staff and consider it like consulting staff. You need to you have to have coaches. Like if you were a professional athlete, you would have all kinds of coaches. You'd have a dietitian. You'd have someone to work on your recovery after the games, to stretch with you and focus on building muscle and endurance. You'd probably practice. You're a professional NBA player, but you spend 3 hours a day practicing how to dribble and how to shoot. Like, dude, you know how to dribble and shoot. Yeah, but you got to be peak performance all the time. Why would you treat trading differently? But then, like, you also have to have the right tools. Like, so look, you join Investor Bootcamp, then you join Quant Box, then you join TradeRs. And they're like, Wayne, that's a lot of stuff. Yeah, what's the problem? Are you a peak athlete? Are you going to have the right tools when you trade? What's your plan? Are you going to treat this like a business, a sustainable business? You should say, dude, I'm going to run a hedge fund and it's going to cost me $300 a month. Are you joking? It used to cost $3 million a month. I used to spend, let's say, $200,000 a year running my fund just to cover compliance. Let me say that again. I used to spend $200,000 a year on compliance running a hedge fund. Just the compliance. And now I'm like, dude, you could have a full functioning staffed business with technical analysts and fundamental analysis, and performance coaches, and it's going to cost you $300 or $400 a month. And I'm going to get you a prop fund too. So, oh my God. So let's say that costs $500 a month, and you have a sustainable hedge fund. It's so stupid cheap, right? So if you're not all in, I don't get it. I just don't get it. I just don't. You're on a different planet. Right? Now, I could charge twice as much. I can charge 5 times as much, but then I would probably exclude you. But you are my focus. Some of you don't believe it. You're like, oh, what a great sales pitch. You don't know me. You don't know me. So anyways, yeah, hardcore awesomeness. Challenger Christmas in gray. I was asked 5 times. Thank you, Jay. Challenger Christmas and gray. The Challenger report. Here we are. So this is in my article I wrote for FXstreet probably 8 or 9 years ago. And I include them in my model for projecting, if you will. NFP. Now, they've moved this report around, so I usually don't bring it up often. They mess around with it. They keep moving where they place it. One of the things they do is, this is the CEO turnover report. What they do is they change the name. It doesn't match the old report. Is this one? We want the mass layoff one. Yeah, okay. So they've changed the name again. So now it's the Wall Street Journal. Some sort of, again, all right. But anyways, many companies are also finding it harder to pass along increased labor cost to consumers in the form of higher prices. A reason why some executives are looking to trim workers now, said Andy Challenger. Among the roles being targeted, great. More layoffs, so they don't give a number out. So this is not, that's just a stupid press release. It's not the report. This is why I don't do it anymore. It's so hard to just find the stupid report. Okay, let's do this one. Oh, where did it go? My mouse, huh? Okay, there we go. All right, this is what I'm looking for. All right, so June 6th, okay, 63,000 cuts, which is a little bit less than before, and 20% lower than before that. So, all right, so year over year, 20,000 less people were laid off. So you can look at this as good or look at this as bad. But what I do is when I do my NFP modeling, and you could do anything, like you could just do something simple like this. And this is kind of what the media does, by the way, when they say, like, what do the experts think? What does the market think? What's the expected number? Very often all they do is they take the 3-month average. Fine, whatever. It's not very intelligent, but that's what they do. Now, if I was going to do something like that, I would do the 3-month average minus this number. Okay. But that would still give me a lower number than what came out today. But that's the Challenger. Okay, it's challengergray.com. Challenger Gray and Christmas. The Challenger report. And that's kind of what I do. Okay. And I wrote an article on FX Street on how to do it. It's called How to Prepare for and Trade the Employment Situation Report. And it's in my profile at FX Street, but we can just go to FX Street. So here's their calendar. They have the best calendar. That's why I keep it here. All right. So you go to, am I going to log in? I don't need to log in. Where's the search bar? No. Where's the search bar? How funny is that? There's no search bar? Trending. Really? The ads aren't loading either. Interesting. There's no search bar? Okay. Well, then log in, subscribe, studio, search. I guess it says. All right. Well, let's just do Wayne McDonell then. I thought the search would be much more prominent, but that's just me. All right. So this is me crushing it on PCE the other day. Dude, we crushed that with traders. We crushed it. It was stupid. We just destroyed it. All right. Recent content. Now we're going to have to do a real search here now. Prepare. There it is. Thank you. Okay. And so I popped that in there, the Challenger report. Okay. And I tell you, nobody on FX Street mentioned the Challenger report before that, before I wrote this. I never heard anyone bring it up. And now people bring it up. What can I say? Cool. Coolio, Cool Mo D. So that's Challenger Christmas and Gray, or the Challenger Gray and Christmas, I guess they're saying. Let's move off Bitcoin, but look, Bitcoin's still a bid for me. Okay, let's roll here. Silver is still in my. I'm still in the trap and break scenario. So technically. We still have an opportunity. This is still a dipper. Okay. Okay. We have lower highs, but not lower lows. So you can wait. This is the buy zone. Oops. This is the buy zone. Look at that. My mouse is dead. I might have to end early. It's gone. It just died again. I'm going to have to end early. There's the buy zone, and there's the up. So it doesn't look good right now. I admit that. But, okay. Oh, is that right? Thank you, moderator. Okay. Okay. So there's your silver. It's not bearish yet, although maybe the bullishness is over. True. It's just not bearish yet. While my WTI, we've been climbing off this bottom. We're back to our old bottom. What does that mean? Bears are going to enter the game. So you might be prepared to trap and break to the south side. Okay? And I would look at it from this point of view now. I guess kind of like that. And breaks to the downside would be very bearish. Oh, and my mouse is dead again. All right. So I'm sorry. I'm out. I'm going to have to be out. I can't get my mouse to move. Sorry, everybody. I'm out. Let's see if I can get this done. And you want to mark this, which I already have marked. But so a move to the south side would be terrible because of this purple zone. So have a wonderful weekend. You're a beautiful babe, but I got to jump. Thank you to FX Street for hosting me for over 17 years. Or is it 18 years? No, it's 18. Thank you for hosting me for this one particular webinar for 18 years. I appreciate this relationship, FX Street. They're good people. They're tall and thin and good looking and healthy. Definitely above average in all ways. I'd like to thank you for hanging with me for this time. I know I hit you hard, but I don't have much time with you, and I got to convince you that you can do this. But you have to have a ridiculous, sickening work ethic. If you think I'm going to load your silver spoon with sugar, you got the wrong guy, my friend. Okay? This is hard work. This is the get rich slow scheme. But I'll teach you how to do it, and I'll teach you how to do it right. So hang with me. So again, you can find me. Look at the logos. Trader's Way. Get a trustworthy and ethical broker. Quant Box. Automate your fundamental research. Tradars. Automate your technical analysis. InvestorBootcamp.com. Get a performance coach. And by the way, I'm going to take all these entities and turn it into Tradars, where you can have a performance coach, you can have fundamental analysis, you can have technical analysis, and one day a trading account, all under one banner. I'm going to take over the world of Tradars by giving you a career in the financial markets. You're going to have a business that's like running a small independent hedge fund. And then we're going to party. But you got to stay close to me. Stay close. I move fast. Peace on earth. May the pips be with you. May your profits be above average. Well, you're the best moderator in the whole world. So thank you. Thank you for working with me all this time. Yeah, it's been... How many has it been? Oh, hundreds. Yeah. Have a wonderful weekend, everybody. I'll see you next week, hopefully. Oh, and summer school. One more. Wait, summer school. Summer school. Hang on, let me show you again. Tradars.co/summer school. This is starting very, 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 very soon. Get on board. This is very, very, very practical. You need this, I'm telling you. This is good. It's going to make a difference. That's it. Like, forget about all the words. This is going to make a difference in your trading, and it's going to build confidence, like a real confidence, because you're going to have real change in skills, not because you're good enough and smart enough and gosh darn it, people like you. No, we're going to go out and hit 10,000 golf balls so you're confident in your ability to hit a golf ball straight. Real world, real practical. Roll up your sleeves, get your fingernails dirtied. Real. That's, I don't know. Dude, you need this. join. It's not a lot of money. Cheers. Okay, I suppose I'm supposed to give you a link too. Okay, and that's it. I got to go now. I'll give you the link. Hang on. Seriously, join. If you don't, I don't understand. Honestly. Why wouldn't you? It's crazy if you don't. So, cheers. I got to get my mouse to move over to this the streaming software. All right. Have a wonderful weekend. Cheers.